Hello everybody and welcome to our 5-minute accounting quick hit on the basic topic of journal entries. Now this is one of the earliest concepts you need to understand in accounting. Before you get any further, you need to understand the journal entry. So what is a journal entry? This is what we do in accounting to record the financial transactions of a business as they occur throughout the year. So it's in chronological order. We purchased supplies today, we paid some bills today, we borrowed some money today. All of those would be journal entries. Now, in accounting, we use what's referred to as double entry accounting, which simply means that we're identifying what all accounts were involved. It's not just cash that we're focused on. Instead, maybe this transaction involved us paying cash, which is one account, to buy supplies, which is the second account. Or maybe we received cash by earning revenue. We're keeping track of revenue as well. That's what we're referring to a double entry. Now, I do want to caution you, double does not necessarily mean just two, but it means there are at least two things happening. So, first of all, to record a journal entry, we need to understand we're not using pluses and minuses or positives and negatives. Yes, we know there are increases and decreases to these various accounts, but we don't use pluses and minuses. Instead, we use the terms debits and credits. So we're going to talk a bit about this, but there are additional videos where we dig in deeper. Debits and credits are opposites. You need to understand that right off the bat. Whatever you do with a debit, you're going to do the opposite with a credit. Now, I want to also mention that the debit, depending on which type of account you're talking about, sometimes it means increase, but for other accounts it means decrease. Same with credits. It all depends on the account type you're talking about. So what I want to point out is you can't just say that, hey, debits are all the time increases or all the time decreases. It depends on that account type. We have a normal balance video where we dig into that in more detail. But I will say if a particular account, if you find that it's increased by a debit because of the normal balance rules, then the opposite, the credit, will decrease it. So that's important to understand as well. A few journal entry rules you need to know about. Debits are always, no matter what account it is, they're always found on the left-hand side of a journal entry. They also always come first. The abbreviation for debit is DR, debit record. Credits, because they're opposite, they're always on the right-hand side. And the abbreviation for credit is CR, credit record. Here is an example of a very simple journal entry that just has two accounts. Notice we have a debit to cash for $1,000, a credit to revenue because it's on the right, it's indented to the right for $1,000 as well. We are balancing out, and we'll talk about that rule in just a bit. Every debit or every journal entry must have the same quantity of debits as it does credits. Next, we'll talk about the compound journal entry. This type of journal entry simply means that we have more than two accounts involved. In this case, we have two different debits and one credit, but the cash and accounts receivable accounts are being debited. 8 plus 200 equals 1,000. We're crediting the revenue because, again, it's indented to the right for a total of 1,000. So our two debits total 1,000. Our one credit totals 1,000. That is a rule for journal entries. The debits and credit dollar amounts must balance, even if the quantity of debits or credits do not. But remember, all of your debits have to come first for a particular account, and then your credits are indented to the right. An important concept to understand here, again, I said the debits and credits must balance out, but with the normal balance rules, when you cover that in a separate video, you'll find that some journal entries end up increasing both accounts. That's fine as long as one's a debit and one's a credit. Some journal entries decrease both accounts for the same reason, and then other journal entries increase one account and decrease the other, and that's perfectly fine. Just one last slide I have here. I want to point out the related videos that are very important to fully understanding this concept. We have the normal balance videos, the posting to T accounts and general ledger videos, and then the trial balance video. If you haven't already seen those, you'll want to review those to fully understand this concept. Thank you for your time, and I look forward to talking to you in those other videos.